The Wall Street ends Friday at a one-week high and snaps its two-week losing streak. Hello and welcome to Editors Roundtable. Today we put the spotlight on the second quarter earnings. We look at whether or not H.R.I.T.I.K will dance again. And we'll also tell you what to expect from Mama Earth listing. I'm Nigel D'Souza, and joining me today, the editors, we have Manglam who's joining us, and Nimesh as well as Prashant. Well, gentlemen,
it's a boys' club today.
All boys club today.
Boys club.
Nigel, what was that? H.R.I.T.I.K will dance?
H.R.I.T.I.K will dance. That Nimesh will be doing it later on. But, we'll take stock of that later. But otherwise, it was a fairly good week, right? I mean, in terms of cricketing action, in terms of the TV markets as well, I think we're feeling good.
Absolutely. Feeling good, and it wasn't just a great week, it's likely to be a good weekend as well from a cricketing action standpoint. You have India versus South Africa touted as the final before the final happening at Eden Gardens. Well, we have one lucky person amongst the four of us who is actually visiting that place.
So,
I'm going for the match, yeah.
You're going for the match?
I was there yesterday for the India-Sri Lanka match as well. A bit disappointing.
Yeah.
Got over in just 2 hours, but yeah.
I was wondering when Manglam said the weekend's going to be exciting. I thought he's going to disclose.
By the way, I will be going for Independence Rock. I.R.I.K is happening in the city, so obviously listen to good rock music.
Good old rock music.
Rock and roll. Let's talk about markets.
But just one thing, Nimesh, carry a big board or something, so I can spot you on the...
I'll carry a board
something which attracts attention. The camera person is going to focus on you so I can spot you. We can spot you, that is.
Let me take a cue from you, Prashant, and let's focus back on markets. Well, it was a pretty good week, actually. The Nifty snapped that two-week losing streak. We ended in the green, and we regained part of last week's losses, so more than half of last week's losses, so that was good. The Nifty Bank, last 6 weeks we have been discussing. It's been the sore thumb. It's not been able to perform. But this week, after 6 weeks, it ended in the green. So that's positive as well. And the mid and the small caps, well, they felt like they're coming back to the party. They outperformed with a gain of from 2.5% odd. Global cues, well, they worked in our favor. We were debating whether or not, the Fed was hawkish or dovish. Well, the street says they believe that they're dovish enough, and they believe that there's not going to be another rate hike that comes about in this year. And that's why we saw yields cool off. You have the dollar index as well. That was a little bit lower. And Brent crude prices have corrected 10% from the recent peak. Now they're down close to around 4%, in the last week itself. And, the large caps performed. Whether you talk about Reliance Industries, ICICI Bank, tightened towards the end of the week. Manglam, they came out with a good set of numbers. 50% of the Nifty's gains came only because of these three names. And the markets actually are analyzing results. They're looking at commentary and reacting. Petronet, they're doing some big capex, maybe unrelated as well. Street didn't like that. Stock was down 10%. JSPL, well, maybe the capex is high, debt as well quite high, and the operational performance was weak. That stock is well 8-9% low in the past week. And MMFSL as well, Mahindra Financial Services, that stock as well was lower. On the flip side, MCX has been a stock that's done very, very well. Nimesh, you've been tracking it quite often as well. And the standard brokerage report as well from UBS, well, they said that there's more to go. So that stock was up close to around 10%. REC has been a big gainer. It's almost doubled. But that stock was higher in this week as well, 11% return. And KPIT, everyone was saying, well, it's quite expensive. They upped their guidance, and the stock gained another 10% in this week itself. And you get a sense that this real estate theme is coming back. Some of the top developers, Godrej, Oberoi, DLF, all of them were up more than 10% in the past week. And some of those hope trades have come back. Will Vodafone get the funding or not? JP Associates, will they come out of the deal with the banking names? These stocks are not satisfied with 10-15%, 20-25% in the past week. I think Vodafone had its best week in multiple years as well. And Z as well was higher. So it was a good week. I'm just wondering or not whether this week was a good week and next week we can come back and see the knockout punch, because you want the Nifty to get back to around that 19,450 odd. But Nimesh, how are you seeing things in terms of dealing with
Well, Nigel, as you rightly pointed out, for us to give that knockout punch, we need the FII money, right?
Yes.
I mean, the DIs have been massive supporters, and that's helping the mid caps to outperform. But we will need that FII money to fire up the large cap names. That's missing. So what happened this week was technically a pullback from a very oversold levels. The PCR at the start of the series was just at 0.8. All the indicators were suggesting that the FIs are massively short. So what we saw was a bit of a short covering rally and not a rally backed by the FI buying. So that's something which is missing, and that needs to come next week if the momentum has to continue. Clearly, the momentum is back with the mid-cap names now, and as you rightly pointed out, so many mid-cap stocks have gone up 10, 15, 20, 30% as well. I guess from a trigger point of view, the last leg of the earnings are typically not that great, so that's something we'll have to watch out for. The MSCI rebalancing will come middle of the month, so that's something which will lead to inflows into many of the stocks. That's something to track. And of course, the state election outcomes and those indications will be very important from a November series as well as for the start of the December series. So, but to my mind, for the momentum to continue, we need that large FI money in the large cap names for the momentum to continue on the upside.
Yeah, and hopefully they stop selling as well, because the sell flows have restarted. And I think a bit of a cushion that we're getting is because there are still shorts in the system.
Yeah.
So maybe the flows don't come in and we get some kind of momentum on the upside, then maybe in fact we get a bit of a bounce. But it's all about earnings. Markets will move sideways, up and down, but ultimately it's all about earnings. Prashant, you have gone through the numbers. How has this earnings season been so far? Good enough?
So actually. I mean, Nigel, we're done with 50% of the earnings. Let me actually just go across to the wall and explain in terms of what the numbers look like. So this is an exercise we do quite often in the middle of the earnings season. And what we do is, let me just quickly explain. We take where earnings expectations for the full year were 1 month, exactly 1 month back, which is right before the first earnings came through, which was TCS this time around. And how has the earnings expectation changed as earnings came through for the full year FY25? We're taking not 24 because, I mean, that's largely in the price. And now, of course, expectations are moving to looking at FY25. So roughly around 100 companies have reported so far. So we're looking at the universe is NSE 200. 100 have reported. 58 companies have seen earnings downgrades. So, more downgrades than upgrades. 39 companies have seen earnings upgrades coming through. Let's dive straight in. Which are the companies which have seen the top earnings upgrades to full year FY25 earnings over the last 1 month? So look at this. Unusual names. IOC and BPCL rank as at the top of the list. I mean, IOC especially. HDFC AMC, HDFC Life, 7.5% and 6.5% respectively. JSW Energy, 11.5%. Dr. Reddy, some 8% upgrade to full year numbers. Maruti, Dixon, and of course KPIT. You guys were talking about KPIT earlier, and KPIT indeed has seen one of the few, actually maybe the only company in the IT services space which has seen earnings being taken up by consensus. Let's get to the downgrades now, and this is, I would say, a bit of a predictable list, right? Look at the top, the first 4 names there: UPL, SRF, Naveen Fluorine, and maybe throw in a Loris Labs as well. But the first 3 are pure chemical companies, agrochemicals, etc. as well. But sharp earnings downgrades, and these are stocks which are completely bombed out already, and they're seeing massive earnings cuts to FY25 numbers still. Loris Laboratories has been a perennial disappointment, 12% cut there in terms of earnings. You had Syngene, which saw cuts. ICICI, Pru, Max Financial were some of the others which saw earnings expectations being brought lower. These are banks, right? Federal, Kotak, HDFC Bank, and this was surprising because, I thought maybe it's all... banks, by the way, for the last 3 quarters have not seen upgrades, but they did not see downgrades as well. But this time we are starting to see some downgrades come through to full year numbers. And it's a high interest area. 30% of the weight is banks, and everybody's waiting for that part of the market to fire. Adani Wilmar, Jubilant Food, QSR, of course, is seeing some pain. Tata Communications, Petronet LNG, Sona BLW, and Infosys are some of the other names which saw downgrades. Just to wrap it up, I mean, what are we seeing? Discretionary growth remains very low. We've heard that from company after company. Rural demand remains subdued. There is hope that because of the festive season, state election spending, etc., this will pick up, but so far subdued. B2B segments, business-to-business segments within categories, within companies are doing very well, and that largely seems to be a function of government capital expenditure. And lastly, export volumes have been a little subdued as well. Because, I mean, the biggest market, the US, for example, has been in a no man's land. It's growing well. It's expected to slow down, but it's not slowing down. So as I remember the conversation with Gokuldas Exports, they said, well, we're waiting for some sort of a slowdown, and that's the reason why their clients, large retailers, are not stocking up yet. Perhaps that will change as we get into the next year. So 50% of the earnings done, 50 more to go. But the verdict in the first 50 is actually quite mixed. Back to you guys.
All right, quite mixed at the halfway mark. Prashant, thanks a lot for that. In fact, I was looking at all the consumer companies also that have reported their numbers. It's slim at the top and fat at the bottom. That's exactly how it is. We've seen the companies report flat sort of revenue growth, but the margin expansion has been pretty good. Important to see what the second half holds, because second half of the year holds 60% of the consumption, and then we have the festive season coming by as well. We'll keep an eye out on all of that, but it's now time to welcome Anshul Sehgal joining in on the show. Anshul, thank you for joining in. Happy Friday, happy weekend, happy festivities ahead of that as well. But how are you feeling about the market right now? The numbers that have come by so far, your thoughts?
Is my audio...
Yes, we can hear you clearly.
Yes.
We can hear you clearly, Anshul. Please go ahead.
Okay, great. I think that I was listening to Prashant just now, and he's given a very interesting and synopsis of what's really happening on the earnings in the current quarter. By and large, I tend to agree with him. I'll just add to that, which is that on agrochemicals, there is a downgrade, a broad-based downgrade on agrochemicals, mainly because of not local issues, but global issues. There is a destocking phenomenon which is happening globally in agrochem. And that is really leading to declines in earnings estimates for most of these companies. While that is bad for the current quarter, but over a period of time, it could mean that this is a low base that is getting set. And if next year we do see earnings upgrades, then that will be good for this space overall. Also, I must mention that, rather than looking at one quarter and earnings going up or down in that quarter, one has to look at the trend. If the trend is downwards, that is quarter after quarter, we see a downgrade, then there is an issue. But one quarter earnings not meeting expectations is just a reset because many times earnings estimates overshoot the real developments on the ground. And that needs a little bit of a correction, and that could happen any quarter. I think that this quarter could be classified as that for the moment. We'll need to see the trend going forward.
Okay, all right, Anshul, we got that. But, I want you to listen to this interesting piece. Nimesh has put down a list of the stocks that we so-called the Hrithik stocks.
Yeah.
The question is, they have underperformed, but now will they dance again? And after that, Nimesh may join in as well.
It's a dream, Nigel. I think in our group, I think the Hrithik and Salman are you both. Right? So after my link, both of you should go to the link and actually.
Actually, the director is
right?
telling me that they won't show the graphics until you dance like Hrithik.
So let them not show the graphics. But I'm not going to laugh with you.
Okay.
So let me go to the wall and explain as to what this Hrithik means and why. And it's not about only these leaders, but the theme of this Samvat was the leaders in every category has underperformed the mid caps and the broader market. So let me just go to the wall and explain what this means. Again, as I said, is this now going to be time for Hrithik to dance? Now, it's been 30 months of underperformance of the large cap names, and I'm putting out the 7 large names here: HDFC Bank, Reliance, Infosys, TCS, and Kotak Mahindra Bank. Look at the CAGR return in the last 30 months since April of 2021. HDFC Bank flat, Reliance just 5-6%, Infosys flat, TCS flat. The only outliner in this was ICICI Bank, which has given 26% return in the last 30 months in this pack. Now, just put that into context of what the markets have done. In the same period, in the last 30 months, Nifty and Sensex both have rallied 10.5%. The mid-cap index, the mid-cap 100 has rallied nearly 21%, and the small-cap index is up almost 20%. So that's the kind of underperformance we've seen in these large-cap names. Now, compared to the peers as well, I've looked at the Salman, this is called the Salman pack, so to speak. Adani Enterprise, Adani Ports, L&T, M&M, NTPC, and Sun Pharma. These stocks have rallied anywhere between 38% to 50% in the same period. So again, compared to not only the indices, but even to the peers, the Hrithik gang has actually underperformed. But if you look at the numbers, if you look at the earnings, that's not the case. The numbers have been quite supportive in terms of earnings. I've just looked at the 3-year CAGR for the Hrithik pack. HDFC Bank, if you look at the revenue CAGR, 14%, PAT CAGR of now almost 19%. Reliance, again, 13% revenue CAGR, nearly 20% of PAT CAGR. Same is the case with TCS, Infosys, ICICI Bank, and Kotak Bank as well. All have done well in terms of not only revenues, but even in terms of PAT earnings. So that's the earnings profile. The other perception is that these stocks have underperformed because of the FPI selling. I've looked at that data as well. In none of the companies we've seen a large FI selling. HDFC Bank should not be compared because post the merger, the holding has gone up. So even if you exclude that, look at Reliance, Infosys, TCS, the holding has been pretty much flat to just 1% down. Even in ICICI Bank, the holding has been pretty much flat. And even in Kotak Bank, while the stock has been massive underperformer, the FI holding has still retained at close to 48%. So that's the FI holding in all these stocks. Now, what could be the triggers? Now, we all know that they have underperformed, but there are some massive triggers to watch out for these names, right? HDFC Bank, the biggest overhang of the merger is now out of the way. Now the focus will be in the earnings. So that's HDFC Bank. Even if you look at Reliance, that stock has underperformed despite the fact that in FY24, there's going to be a 13% EBITDA growth for Reliance. That's according to the Jefferies note. So that's a trigger there. Even in case of Infosys and TCS, most of the concerns with regards to the US recession seems to be behind. They're sitting on heavy cash as well, and they are good dividend plays as well. So that's the trigger for Infosys and TCS within the IT names. Even if you look at ICICI Bank, that's been the most consistent performer in terms of earnings, and still the stock has not done well. So there is an earnings support for ICICI Bank, and the last one is Kotak Bank. Even for Kotak Bank, in the last 1 year, the biggest overhang was the new CEO appointment. Now that is out of the way. They've appointed a new CEO, and Uday Kotak will step down at the end of the year. So there are massive triggers now, not only earnings, but news triggers as well for the H.R.I.T.I.K gang to outperform. The theme this year was the large cap leaders have underperformed the mid cap and small cap. But now the question is, for the next Samvat, can these leaders come back and outperform the broader markets?
Well, splendid piece, Nimesh. You put it so well, and now we'll have to see whether or not then the music will play, but who's going to dance and who's going to do the break dance as well. Anshul, we'll want your view on that, but for the time being, we'll slip into a short break. When you come back, we'll put the spotlight on the big IPO this week, Mama Earth. We'll also tell you what you must watch out for in terms of the stock market list. Don't go anywhere.